All right, so next up in capital expenditure financial investment is the payments to acquire fixed assets. So if we see here, we've gone from 470 to 500, from 210 to 320. So we have acquired some new fixed assets. There's a bit more to it than just kind of tracking that change in cost, because there's disposals as well. Because there's disposals as well, I'm going to take in receipts from the sale of fixed assets here as well in capital expenditure and financial investments. Okay, there is a little bit of work to these two, so I would say I would do these as kind of a note. All right. First thing I'm going to do is maybe the receipts from the sale of fixed assets, the actual proceeds you get from the sale of fixed assets. And I've already given one of them, so I'm told when I sold the machinery I got 66,000. I'm not given that number though for the equipment. If you remember back to the equipment, I was just given a loss, so that was easier when I was doing a previous part of the question, but it gives me a little bit more work to do now. All right, so what I'm just going to get up is the little profit and loss on disposal of machinery working that I did, and I'm just going to kind of follow this for the equipment that I disposed of as well. So what do I know? So I know the answer here. I know that I incurred a loss of 12,000 on the disposal of equipment. What I'm trying to do is figure out this number here, the proceeds, because that cash in, the actual money I get when I dispose of these, that's an inflow of cash. That should go in your cash flow statement. So I'll have to fill everything else in then. So let's say depreciation, let's do that the same way. So depreciation on equipment, accumulated depreciation went from 15 to 40. So that's a difference of 25,000 euro. But I'm told depreciation on equipment was 35,000 that year. So there's only been a 25 change in accumulated depreciation, but a 35 in what went to the profit and loss. So that difference of 10,000 euro, that must have been the depreciation on the equipment that you disposed of. All right, so there's 10,000 going in there. The cost of what you disposed then. So I'm giving a little bit of information here that during the year I purchased equipment amounting to 190,000 euro. So your equipment last year was 210. It tells me that I purchased stuff worth 190. So 210 plus 190 is 400,000 euro. So 210 plus 190 is 400. I expect this year's cost to be 400, but it's only 320. So 80 grand is gone there, and that must be the equipment I disposed of. So the cost of equipment disposal is 80 grand as well. So what I disposed of from equipment also had a cost of 80,000. So that means the net book value of it was 70,000. On this one, I made a loss of 12,000. So if it had a book value of 70 and I made a loss of 12 when I disposed it, it must have been the difference between those 58,000 that I got when I sold it. All right, so I was able to work out these numbers from the accounts, well, these two from the accounts somewhere. This I was given, I was able to work back to this 58,000 then. So then just your 62, your 66 and your 58 added together are 124. Yeah. So 124,000, that's the actual money you receive for those fixed assets you disposed of. So receipts from sales of fixed assets, that's money in, so that is plus 124,000. What I need to look at now is my payments to acquire fixed assets. So like I said, I might just do a kind of rough enough working for this one. So let's say on the 31st of the 12th, 14. I had fixed assets which cost 470 plus 210. So 470,000 plus 210,000 is 680,000. I disposed of two that cost 80 grand. So I got rid of 160,000's worth of equipment. So 680 take away 120 is 520,000. So that's what I would expect 31 December 15's cost to be. So if I didn't acquire any new fixed assets, it would be 520. But if you look here, I've got 500 plus 320. I've got 820 worth of assets. So 520 is what I would have had if I didn't acquire anything new. 820's what I do have. So if I just take those away from each other, so 520 take away 820 means 300,000 is what I must have spent to acquire fixed assets. Okay. There's maybe a slightly different way you could have got at that, because they did give me the 190 figure here for what I purchased in equipment. I could have just done this working maybe for the machinery, but you know, once I'd done this working here, it was as easy to do this. So 300,000 euro there is the money you actually spent to acquire fixed assets. Okay, so the fixed asset stuff there a little bit tricky, I think, but just you'll see it's kind of the same thing again and again as you go through questions. So that's 300,000 euro that I actually spent to acquire fixed assets. So that's an outflow of cash. That's money I am spending. So those three together are an outflow of 216,000 euro. Equity dividends paid. So there's no payments due or prepaid or anything there on dividends. So I'm just going back to my abridged profit and loss, and I figured out that the dividends paid were 102,000. All right, so equity dividends paid, just dividends paid, ordinary dividends paid, 102,000. All right, so we're going to start with our operating activities, and we're going to take all these amounts away, and they come to negative 176,000. So that is my net cash flow before liquid resources and financing. All right. Next up then, this is one I don't think we'd seen before, is the management of liquid resources. So liquid just means you can turn it into cash quite quickly. Okay, so we'll find the kind of liquid resources stuff here in current assets. Okay, so we have purchased a new, I guess, kind of current asset here, government securities, which by putting it in current assets, they are telling me is a liquid resource. Okay, so just like when I went from 80 to 120 in investments, that was an outflow of 40 to buy new financial fixed assets. This must be an outflow of 40 to buy new, basically current financial assets or liquid assets. Okay, so what's going to go in here is just your purchase of government securities. So they've gone from 0 to 40, so you must have spent 40,000 euro acquiring those. All right. The financing stuff then is all straightforward enough. So you'll find all that down here in the financed by. So you have gone from 150 grand in loans to 200 in loans. So that is for debentures. So receipts from issue of debentures. So it's 50. You can just put the 50 grand in, or you can put your working in of 200 minus 150, but that's 50,000. So remember here, we end up looking at this kind of on the flip side in the next section of the answer, but here we are looking at the at the kind of, I suppose, cash impact of this, that when I issue another 50 grand of debentures, I receive 50 grand in cash from whoever bought those debentures from me, whoever loaned that money to me. Then I've got receipts from the issue of share capital. So I had 650,000 share capital issued there, and that went to 850,000 in share capital. So I've received another 200,000 in share capital. So receipts from issue of share capital, and that's 200,000 in. And same thing then, my share premium has gone from 0 to 30. So receipts from share premium. Again, if you want, you can put in the working 30,000, take away 0 is an inflow of 30,000. So just add those together. That is an inflow of 280,000 in cash. And then remember, you totaled down to here, so minus 176, take away 40, plus your 280 is 64,000. This can be an increase or decrease in cash. It's positive here, so it is an increase in cash. Okay, so that's your answer for your cash flow statement. That's 64,000 increase in cash. Okay, that's the bulk of the question done. There is just a little reconciliation I have to do now at the end. All right, I'll do that in the next video.